Hi everyone, let's have a look at my Elliott Wave scenarios on Bitcoin now that price took out the all-time high. So on a weekly time frame, we're still looking for higher prices and a larger wave of 5. Unrelated to if this wave 4 is finished at the low or we get a larger corrective structure, it doesn't really matter. If we get a larger corrective structure, we're looking for a flat and then continuation up in wave 5 afterwards. If this here is the end of a 4, we want to see a wave 1, 2, 3, 4 and a wave 5. This wave 4 should be quite similar in size compared to the wave 2. And then we're looking at the daily time frame. The bearish scenario here is a larger range in a flat structure. So we have a wave A, wave B, and then wave C. You want wave C to at least finish below the midline of this channel that you take from the start to the end of wave A. This is the zone for a running flat. A, B, and wave C does not take out the low at 107. Instead, it moves towards the upside. And if we consider either a regular or expanded flat, you want price to take out the low at 107K. After wave C, you're looking for price to move towards the upside. This is basically the scenario that leads to a longer wave 4 on a weekly time frame, and then we get wave 5 afterwards. Your bullish scenario is a 5-wave move towards the upside. Here's your 1, 2, you look for 3, 4, 5. This move to the upside now almost touched the 1.618 at 126. For me, it's fine. It's pretty much reached. So for a wave 3, all good, all fine. We want a wave 4 and a wave 5. Now wave 3, of course, can extend to higher prices, but in a second I'll go to the 1-hour time frame and explain why I'm not really looking for this to just continue in a straight line, and instead it's very interesting to look for ranges or retracements. Now this wave 4 here in time should be quite similar compared to this wave 2. This wave 2 took about a week, so you can imagine this wave 4 should take about a week as well. And as we then get more information, we'll have to figure out what exact structure, corrective structure, is forming here in this particular scenario. Now you don't want wave 4 to move to the downside and overlap with wave 1. That is the invalidation at 118K. After wave 4, you're looking for wave 5 to the upside. After wave 5, expect a retracement. However, the moment price is forming a 5-wave move to the upside and finishes, you have to be aware that every top after a 5-wave move can be the end of the bull market and the start of a potential bear market. If this range or retracement to the downside is corrective, we're looking for continuation to the upside. If so, then this can become a larger wave 1, this a larger 2, and you look for price to move up in a larger wave 3, which then means you're looking for 1, 2, 3, and still another 4 and 5 at a later stage. However, you have to be aware that after a 5-wave structure, you can also just move down and look for new lows, and that is going to be a problem. So the retracement is going to play an important role. And then we go to the 1-hour time frame. And this is the unfinished impulse scenario. So what you're looking at here is a 5-wave structure in a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. Common target for your wave 4 on the chart, 23605, taken from the low of 2 to the high of 3. Sorry, this is the low of 2 to the high of 3, giving you an area between 122.7K and 119.2K. Invalidation, 117.6K. You want wave 4 to be a 3-wave corrective structure to the downside. Now, what is quite interesting is the time of the lower degree wave 4s. So when you consider an impulse to the upside, you get your 1, 2s, then your 3, and then you get your wave 4s and your wave 5s. Preferably your lower degree 1, 2s, right? You start with the highest degree 1, 2, then you have a lower degree 1, 2, then another lowest degree 1, 2, etc. Preferably each lower degree 1, 2 is a little bit shorter in time and price compared to the higher degree 1, 2, or quite similar in price and time. But it's the other way around with your 4s and your 5s. Now your wave 5s can be a bit longer or shorter compared to the lower degree 5. Doesn't really matter too much. But the 4s is more interesting to look at. Your wave 4s of a higher degree are preferably each time a little bit larger in price or time, or at least quite similar. Now, yeah, it depends on the structure. If your lowest degree wave 4 is a triangle, which tends to take a lot of time, and your next wave 4 is a zigzag structure or a WXY double zigzag, it is very likely that that wave 4 is shorter in time than your triangle structure. But of course, as this then is a wave 4, you do want a certain retracement into common targets for a wave 4, because a zigzag family structure is a deep retracement. So there's, different ways to figure that out. But when we look at this structure to the upside here, what you can see is that the wave 4s are actually getting a little bit longer in price and or time. So we have the wave 4, a little bit longer again, a little bit longer. This one here, again, a longer sideways range, even though this here would be a wave 4 matching this too. But you can see that the ranges are getting a bit longer in time, which adds to the probabilities of looking for an impulse to end, as we are most likely, highest probability, in wave 4/5s, which then eventually finishes an impulse, after which you look for a retracement. And if we consider this scenario and we're looking for a wave 5, wherever that 5 is going to end, and we can take a fib from the start to the end of this move, and then eventually you're going to be looking for retracements to the downside, right, after this wave 5 here. Now, if that wave 5 is a wave 3, 1, 2, 3, and then you look for a 4 and a 5, then your target area for 4 is going to be taken from this low to wherever the high of 5 is going to be. But let's put it here on my top of the polyline, and then we drag it to the right, and then we toggle on the wave 4 target area. And then your target area for your 4 here is 123.6, 118.4. Again, it very, very much depends on where this 5 is going to end, right? 126, 128, 130, whatever. We'll have to wait and see. But this is how you pull the fib for your bullish, for like daily time frame scenario. 1, 2, 3, 4, 5. This is how you get your target area for wave 4. And if you're looking for a wave C, then after wave 5, you just move down. That's your flat scenario. A, B, and then you get a wave C to the downside. In both cases, after an impulse, you're looking for a retracement to the downside, and the retracement will let us know more. For a wave 4, you want a 3-wave corrective structure, while if you're looking for a wave C to the downside, you want to have an impulse. 1, 2, 3, 4, 5, correction, you're looking for continuation, that's a wave 1, 2, you look for a wave 3, and then another 4 and 5 at a later stage to finish your wave C. This is your arguably more bearish scenario, of course, where you have a finished impulse. Wave 5 here is in another high on a lower amount of volume. However, when we look at this move up, it looks 3-wavy on a lower time frame. Like that would be the final leg to the upside in your wave 3. You can see we have a move up, sideways and up. Looks very 3-wavy. So unless we can make this range part of this larger structure, it is quite unlikely that this count is the correct count, because 3 being a 3-waver. And I do preferably count this move to the downside as a zigzag family structure. The potential is there for a WX and a Y, but after a WXY, your only larger corrective structure really can be a flat in a wave A, B, and then a wave C. But over here, with this move up, price did not reach high enough to consider flats. You take a fib from the start to the end of that potential WXY, you toggle on the 0.9 fib, and you can see the 0.9 here is not touched with this move towards the upside. So therefore, we have to be aware that maybe this finished impulse scenario has lower probabilities than the unfinished scenario. But I think it is important to realize that the probabilities are highest. You're looking at wave 4s and 5s to end an impulse unrelated to 5 in or one more 5. Sure, getting another 4 or 5 would be nice. Then this is a 1, 2, 3, 4, 5 as counted. Wave 4 did not touch the 0.618, taken from low of 2 to high of 3. So no invalidation touched, got close, but not touched. And then this final leg up is counted as your wave 5. So 1, 2, 3, 4, 5 to then finish 3, potentially look for 4 and 5. But we have to wait for the range retracement. Is it corrective? If yes, we look for higher prices and look for that wave 5 to the upside. And here we have a finished structure, but it does require us to count this as either a 3 or somehow this has to be included in this particular range. That is details. In general, from a trading point of view in Elliott Waves, you aim to enter in your 1-2s, you ride to wave 3, you aim to exit in your wave 4s and your wave 5s. Trade management is important. It's not about sniping the exact low, exiting at the exact high. It's about knowing the probabilities and directional bias. Then we get to the levels. These are the volume levels that I have on my chart. These are the time frame horizontals that I have on my chart. And these are the order blocks. I mean, we moved through this one, so let me remove this one. We have an order block over here at about 120.5, and then the ones down here, but those are at the moment not yet relevant. So then we get to the, I suppose, probabilities on a weekly time frame. We're bullish, unrelated to if this range is continuing and creates a larger flat structure. It really doesn't matter for a weekly time frame. You're still looking for higher prices, and in a daily bullish case, I suppose 1, 2, 3, 4, 5, you're still looking for a wave 4 similar in size compared to your wave 2. So in both of those scenarios, you're still looking for upside, really bottom line on a weekly time frame. On the 4-hour time frame, impulse or a flat depends on the retracement range. You can count this as an A, B, C, or 1, 2, 3. We just have to wait for the range to develop. If price is going to move beyond a 1.618, where is it? Yeah, so if price is going to move beyond the 1.618 trend-based SIP taken from start of 1, end of 1, end of 2, that is the moment really that a wave 3 starts to increase in probabilities. So then you want to see this like 1, 2, and eventually you want wave 3 to really continue beyond the 1.618. That is when significantly wave C probabilities are reduced in A, B, C. But be mindful, the 1.618 is still a target for a C. So as long as price is not significantly moving beyond this level, you got to be aware of A, B, C's and their probabilities, which is this scenario, of course, over here. So on the 4-hour time frame, I put them both on the one spot because in the end, this move to the upside counted as an impulse can be either a C or a 3, and after 3 you expect a wave 4, after C you expect a more deeper retracement. In both cases you would look for a range or retracement. And on the 1-hour time frame, it looks like price is forming wave 4s and 5s, looking to end an impulse to the upside, which also matches with my previous content where I said I'm not really a big fan of just straight continuation to the upside. I would prefer, I mean, initially I'd like to have a lower high over here just to fake out the potential bias and then get that range or retracement. Now we took the high. I also mentioned in a previous video, taking out the liquidity is also fine, creating a bit of a deviation and a bit of a fake out before then a range or retracement, which can then be true as that would be your 4, or you finish C here and you get a larger retracement. We'll just wait and see, but it looks like price on the 1-hour time frame is forming some wave 4s and 5. So that being said, I hope that this video was helpful or valuable to you here on the Sunday. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.